Hi folks, in this video what we're going to be looking at is the range breakout setup. First thing that we need to do is identify the overnight trade range. The overnight trade range for me is the Asian session range. So typically in the overnight session, price is contained within the previous swing high and the previous swing low to be made. Swing high is a bar preceded and succeeded by lower highs. Swing low is a bar preceded and succeeded by higher lows. So that last swing low is there, and the last swing high to be made for yesterday's price action is there, and price, as you can see, was contained within the previous swing high and the previous swing low. Price is making lower highs and higher lows within that swing high and swing low. Price is range bound, so that is my overnight trading range identified. The next thing that I want to note with the range is this range at an ideal location? What I'm looking for is for price action, this range to be at the high end of the previous day's high-low range. So these solid red lines, these are the previous day's high-low, highs and lows. So what I can see is that this high-low range is at the top portion, the top third portion basically, of the previous day's high-low range. That's an ideal location that I'm looking for. I've identified the overnight range. In this case, it's at an ideal location. So what I'm now looking for is for price to move out of the boundaries of the range bound location. What I'm not going to do, and we'll come on to this later, is I am not going to place what's known as a bracket trade. Most of the textbooks say that we should place a buy, when you identify a range, that you should place a buy order above and a sell order below. Whichever one is triggered first, the opposite order becomes your stop loss location. Other suggested stop losses are 50% of the range. So for example, you would place a buy order above, a sell order below. If the buy order was triggered, your stop loss would go up 50% of the stop size. The idea behind that is that the height of the range is your target. So if you use a stop loss of 50% of the range, then that's going to give you a 2-to-1 reward ratio. What I'm going to do though is I'm going to use this overnight trading range as a trigger into a larger movement, and ideally what I'm looking for is an average day's move. Average day's move at the moment on euro dollar is about 150 points. So that's what I'm looking to capture. My objective is to capture the main thrust move of the day. So I'm not going to follow what the textbooks say, because if it was that simple, everyone would be doing it, everyone would be making money. If trading was that simple, why isn't everyone doing it? So how can we actually, first of all, identify a trading opportunity? Well, I'm looking for price to move out of the boundaries of the range bound location. So thinking now about the three basic questions: where's price now, what's it doing, how can I get involved? If price goes up, down, sideways, what's the plan of action? First two parts of my three basic question have been answered. Where's price now, what's it doing? Price is range bound at the high end of the previous day's high-low range. It's in an ideal location. The previous trend was up, which does suggest a continuation about 65% of the time. But 35% of the time, these patterns can act as reversal patterns. So the last part of the three basic questions is, if price goes up, down or sideways, what's the plan of action? So if price remains range bound and within the range that I've identified, I'm going to wait. It's a decision not to place a trade just yet. If price moves out the high of the range, I'll be looking for breakout, pullback setup. If price breaks through the low of the range, again I'm looking for a breakout, pullback setup. So as the chart continues to develop, what I'm looking for is for price to move beyond the range bounds, the range boundaries. I'm looking for the first bar not to make a new bar high. So I've got the breakout move here. That's the breakout move. I'm not looking for a close past. I'm not looking for two bars to move beyond the boundaries of the range. I'm simply looking for a move past. That could be 1 pip, 5 pip, 10 pips, 20 pips. Whatever that size is, I'm simply looking for a movement past the range highs or lows. The pullback for me is created by the first bar not to make a new bar high, which is there. That gives me my entry above the breakout high. So I'll be looking initially for an entry above, in this case 158.24. As I'm buying, I need to take the spread into consideration, and I'm going to be looking to buy above 158.24. As the chart continues to develop, price did retrace a little bit further, and we could have actually refined this entry based on a fib retracement setup, which is explained elsewhere on the site, and we could have refined that down to above 158.05. So I'd be looking for an entry above 158.05. So in this case we can refine the entry. It's based on a fib retracement setup. I'm not going to explain it here as it is explained elsewhere on the site, as I've mentioned. So essentially we're looking for a breakout pullback setup. The first bar not to make a new bar high developed the entry, and in this example we could have refined the entry slightly, but essentially we've got breakout pullback setup. Stop loss goes past the event. The event is the pullback and goes below the lowest point that price retraced to after the breakout move. So stop loss location for me is going to go below 157.90, which is past the lowest point of the retracement after the breakout move. So identify the range, then wait for price to move beyond the range boundaries. That's the breakout, either up or down outside the range. Then I'm looking for a pullback to develop, either on the 15-minute chart, which is what we're looking at here. Ideally what I look at is initially the lower time frames personally, to try and get a slightly earlier entry than what I could get on the 15-minute chart, and ultimately a slightly lower risk on the trade. So without taking trade management into account on how I manage this trade as an individual, let's just focus on the pattern itself. We've identified the breakout. We're waiting for the first pullback to develop after the breakout move, and that's what I'll be looking to trade. For a target, what I'm looking for in an ideal situation is a movement to an average day's move. Now, as I've said, an average day's move on Eurodollar at the moment, at the time of this recording, is about 150 points. All I'm doing is adding 150 to the low of the day. The low of the day is 157.65, so I'm just adding 150 points to the low of the day, and that gives me a projected target based on an average day's move. It can do more than an average day's move, as we know. It can do less than an average day's move. What I'm looking for is a target on average of 150 points. Sometimes we'll get it, sometimes we won't. So without going again into the details of how I actively manage the trade, my ultimate target goal is an average day's move. So as the chart continues to develop, we can see that price in this instance trends quite nicely and moves up to 159.15, which is basically 150 points added to the low of the day. Quite conveniently, it also gives us a price action exit, which is this shooting star pattern bar here. There's also alternative methods, and on the website I describe my money management tactic, my trade management tactic, which is my active trade management when certain parameters and conditions are met. But from the pattern's perspective, we've identified the range, taken the breakout pullback setup, and ideally looking for a target based on an average day's move. And that's the pattern, folks. It's as simple as that. This is what I look for on a day in, day out basis. Identify an overnight trading range at an ideal location, which is the previous day's high or the previous day's low. As a general rule of thumb, it needs to be in the top third or the bottom third of the previous day's high-low range. If the overnight range is in the middle of the previous day's high-low range, for me, that's not the best location to take a trade on board, and typically price will continue to consolidate for a longer period of time than the normal overnight trading range. The targets in mind are based on an average day's move. And that's the range breakout setup, folks. That is the overnight or the Asian session range breakout setup.